I think when you play the word association game with the word insurance, you get some pretty shocking answers.
Rip off.
I'm not really trusting them.
Overwhelming, daunting, and just kind of like unknown, like
a scam.
It's like a trigger word.
Like boring, like just corporate and like
greedy,
I don't want to deal with them.
Expensive.
Evil.
it's like you think they're gonna cover it, but then it's like, oh, you didn't read the fine print about the tires of the bike not being covered. It's like, okay, so then why did I get this in the first place?
When we created Lemonade, we wanted to create an insurance company that would have an entirely different word cloud associated with it. And I think you will find a lot of people talk about Lemonade as being delightful, aligned, socially impactful. Words like trust and love, those are the kinds of words that I think consumers have come to associate with Lemonade.
Daniel and I have both been tech entrepreneurs for 20 years, and it just so happened we were looking for the next big thing. So we started looking at different industries, but when we came to insurance, we stopped.
We had found a destination. The more we thought about it, the more we realized that insurance may be the largest disruptable industry on the planet. Even though neither of us had come from the world of insurance, we found three things in insurance that just about never come together, that elusive trifecta. The first one was just how vast the insurance sector is. In America, you're talking about something like 11% of GDP, and it's about $5 trillion worldwide. Some of the largest insurance companies in the world do over $100 billion a year, but none of them has above 4% market share. The idea that you can be a Fortune 100 company and have only 4% market share, that just blew our mind. The second thing that we found was that it's largely unchanged. It's really dominated today by the same companies that dominated 100 years ago, and sometimes 200 years ago, and sometimes 300 years ago. In the United States, 12 of the Fortune 100 companies are insurance companies, and their average age is about 125. 125 years ago, there were no airplanes, there was no air conditioning, there were no antibiotics. So the world has been transformed, but insurance really hasn't. That speaks to a profound opportunity for innovation. And the third element is that it's a deeply unloved sector. In the Urban Dictionary, the crowdsourced definition for the word insurance is a business that involves selling people promises to pay later that are never fulfilled.
We didn't know much about insurance, but we did know that it was unloved and unspoiled by innovation. For us, that signaled the ultimate opportunity to start from scratch.
We decided to use our ignorance for all it's worth and to do some first principles thinking. We started to think, what kind of insurance company would we love? What could we bring from the experience that we had in the tech sector, in the sharing economy, in consumer-centric innovation? And how could we use all of those to build an insurance company if we had an entirely blank page? So we decided to take a run at reimagining it. Our strategy is really quite simple. It begins with being customer-centric, devoutly customer-centric. That may sound trite, but in insurance, it's a formidable task. The very business model of insurance is seen as pitting insurers against their customers. But if you do the hard work of modernizing the business model and actually get to delighting customers, that can fuel rapid growth, very rapid growth. Growth is valuable in and of itself, but for us it does double duty. It generates huge amounts of highly predictive proprietary data. At its core, insurance is about monetizing probability theory, and so a sustained data advantage means a sustained advantage at pricing and underwriting risk. That's the very heart of insurance. Finally, given how our business is built atop of a digital substrate, those data serve as training data sets for many aspects of our business, allowing us to refine our algorithms, increase our efficiency, and lower our costs to the delight of our customers. And so the loop closes, the flywheel turns, and the moat grows stronger with every rotation. That is our strategy. It starts with delighting the customer. Always put the customer at the center. Build a technology stack that is customer-centric, a business model that is customer-centric, a user experience that is all about the customer. Not the policy, not the broker, not the regulator, not the technology, the customer.
We wanted to build an insurance company that people actually love by removing friction from the process. The perception is that insurance companies make money by denying claims. So there's conflict of interest at the very core of the business model.
You claim $1,000 and I'm the insurance company. If I pay those $1,000, you're 1,000 richer and I'm 1,000 poorer. So when it comes to paying your claim, we're fighting over the same coin. It's difficult to build a lovable brand atop of a conflicted relationship.
The idea is to make as much money as you can and give out as little as you can for an insurance company. That's their bottom line, right? That's kind of how they operate as a business.
I don't feel like they actually have my back.
Yeah.
You know?
That's why we built our own insurance carriers in both America and in Europe. We own our licenses, we own the relationship with the regulators, and we own the relationship with the customer. Building our platform from scratch, every license, every line of code, enabled us to reimagine what the business model of a modern digital insurer can be. At Lemonade, when you pay us $1, you know in advance that we will keep a fixed fee, currently 25%. We use the remaining 75% to pay your claims and reinsurance, and if there's money left over at year's end, we give it back to nonprofits of your choosing. These two programs, our charitable giveback and our reinsurance, they act as ballasts, stabilizing our flat fee, and we believe that changes everything. Insurance is a high retention subscription business, which is why the top line of insurance companies are usually stable and predictable, but their bottom lines can literally fluctuate with the weather. Earthquakes, hailstorms, wildfires, hurricanes, all these can strike with little or no warning, and that volatility means that insurers often see wild swings in their results. And that is why they must keep such capital-intensive reserves for those rainy days. Lemonade works differently. The way we have structured our reinsurance means that we have dramatically curtailed any tail risks, letting us operate as a capital-light business with predictable results, even in years with bad surprises. What about the years with good surprises? Well, when the variance is favorable, we share that good fortune with nonprofits chosen by our customers. As a certified B Corp and a mission-driven company, this annual giveback is hugely meaningful to us all. But it goes much deeper than just feeling good. Taken together, our charitable giveback and our reinsurance, they mean that we are less incentivized to deny your claims, and you're less incentivized to embellish them. And so the insurance vicious cycle of spiraling distrust starts to look more and more like a virtuous cycle that we believe ultimately lowers friction, lowers fraud, lowers churn, lowers costs, all to the benefit of our shareholders, our customers, and their chosen charities. The upshot is a capital-light, contemporary, and predictable business model that, we think, turns a transactional and conflicted relationship into an aligned and meaningful one.
It's nice to know that you're dealing with an organization that isn't hedging their bets that you won't file a claim so they can get richer. The money that you're putting in is actually supporting a cause that you really care about.
We chose Women in Need to be able to support women across the United States.
We chose Teach for America, which I chose because my wife is a teacher.
I chose One for Animals because I have a dog.
It was really important to be working with a company that had the same values that we do.
We've seen people who have gotten their claim paid for, let's say, a stolen laptop, suddenly find their laptop or have their laptop returned to them. And they now write into Lemonade asking, how can we return this money? This money doesn't belong to us. It actually should be going to our charity that we chose. And we believe that this is kind of bringing out the best in all of us and really changing how we treat insurance and really making us a society that is connected to one another.
After we architected the foundations of Lemonade to increase alignment with customers, it was time to build a technology stack to delight them.
Everything about our product feels radically different than what you'd expect. You buy insurance from Lemonade by chatting with our bot, Maya.
I'm me, and there's Maya the bot, which is, I would say, an AI version of me.
I signed up in 30 seconds. It was done, easy.
More often than not, when I'm dealing with other insurance companies, I've got lots of paperwork, lots of phone calls, lots of waiting times, but that wasn't my experience when I was using Lemonade.
Chatting to Maya is playful. People enjoy the experience. They often post about how easy, unexpected, and refreshing it was.
She's much more efficient and very, very nice, I'm told.
To help people feel comfortable and understand what they're buying, we hardly use any insurance language in the process.
Using the Lemonade app was nice and easy, straight to the point. It was immediately done.
It's so much more pleasant when you can just text your insurance company.
When you get coverage quickly and painlessly, it transforms the experience from a hassle to something joyful. Decreasing dependency on agents helps us lower costs and pass on savings to customers. This can be dramatic, with minimum premium costs often 50% less than our competitors for first-time buyers of our renter's insurance. In addition to the purchase experience, we've completely reimagined how claims work. Claims are the most important part of our business. When you buy insurance, the product you're actually buying is the ability to file a claim. So we designed a digital process that allows us to handle and pay claims much faster. Our AI bot, Jim, can often determine if a claim is valid, and if it is, pay it in seconds. In about 96% of the cases, Jim will take first notice of loss. In fact, Jim handles, settles, and pays about a third of our claims instantly. This is all done with absolutely no human intervention.
I'd found out that I'd actually been reimbursed about 15 minutes after I'd filed my claim. When I tell people about the whole incident, you get this like, oh my God. And it's just like, no, it wasn't an oh my God thing. It's almost like it didn't even happen. When I entered my apartment, I found that several items were missing.
My bike was parked on the side of the street.
My purse was stolen, which had my wallet, cards, iPhone.
So as soon as I got home, I just made sure to file a police report and make sure the police knew everything.
My phone got stolen in Amsterdam. So as soon as we got back to New York, the first thing that I did was wanted to fill out the claim for my stolen phone, and then it was instant. I got all of it back. Even I claimed the phone case as well, and I was able to get that back.
Basically, within an hour of being back in New York, Alan had replaced his phone.
It's true.
Yeah.
We've completely reimagined claims, making the process simple and transparent. Our business model aligns interest, and our technology removes friction, hassle, costs, and delays. We believe this is the key to delighting our customers.
With insurance, you have it just in case. But when the just in case happens, you're not quite sure, is this a real thing? Will this really work? And when it did, I was just like, that was incredible. That was great.
Even in cases where Jim can't authorize the whole payment, AI Jim has done so much of the heavy lifting that by the time a human comes into the picture, everything is laid out neatly in front of them, allowing us to settle claims with a minimum of hassle, a minimum of delay, and a minimum of overhead.
The combination of our app and our meticulously trained customer experience team helped us achieve a Net Promoter Score of above 70. That's a score usually seen by the likes of Apple and Tesla, not insurance companies.
One of the moments when I realized that I was working at a very different type of insurance company was handling a fire claim.
About an hour and a half ago, I got a phone call from my super in New York. I was at a meeting in Soho saying that my apartment had caught fire. Fire department came and put it out, and most of my belongings were destroyed. It looks like the source of the fire was somewhere in the kitchen. So this is the kitchen.
This damaged an apartment complex, and the person wasn't able to stay there. And it was just really great to be able to hook them up with a hotel immediately and also take care of the damage to the building.
Getting to know my claims supervisor was incredible. Not only did he give me the factual information that I needed, but he made me feel as comfortable as possible given what had happened to me. They say that you don't miss your water until your well runs dry. Well, if I didn't have lemonade, I'd be in a very dry well right now.
We try to benchmark ourselves against some of the most respected brands in the tech sector. Tens of thousands of customer reviews have awarded Lemonade a near perfect rating on the Apple App Store.
We also benchmark ourselves against the rest of the insurance industry. In our short time in market, we've climbed the ranks to become the top-rated homeowners and renters insurance company in the US, according to a number of sources, among them ClearSurance, one of the most popular destinations where customers review their insurance company. Out of over 300 insurance companies ranked there by consumers, we currently sit at the very top. The consumer publication, US News and World Report, has similarly crowned Lemonade the best renters insurance company for 2020. We've worked hard at understanding what consumers want and built, pretty much from scratch, a new business model, infused with aligned values and packaged using a playful and incredibly sophisticated technology stack. We've been able to harness the delight that generates to feed rapid growth.
We measure the health of our business using a number of key metrics. We count the number of customers we have. We also look at premium per customer, or PPC. We can then multiply those two together to get our top line, what we call in-force premium, or IFP. And we track these numbers on a real-time basis. At the end of the first quarter of 2020, we had nearly 730,000 customers. Our premium per customer was $183, while IFP was $133 million. Our IFP grew at more than 450% compound annual growth rate in our first 3 years. And last fall, we passed the $100 million mark in IFP.
To go from $0 to $100 million in top line in 3 years is really among best in class. There are very few companies, forget insurance companies, very few fast growth tech companies that have been able to produce that kind of growth. And when you look at some of the drivers of this growth, that's why I think things get really interesting. 90% of our customers tell us they are not switching from anyone to Lemonade. That's extraordinary. You don't have to watch a ton of TV to know that the entire insurance industry is predicated on the I switched and I saved value proposition. I switched to so-and-so and I saved $500. You've seen the commercials. We're not playing that game. We're playing an entirely different sport. We are picking the fruit from the tree before it can even go into someone else's basket. When you have 90% of your customers coming to you before they've gone to any other insurance company, when they're young and the needs are modest, and then as they go through lifecycle events, their needs for insurance grow, and we hope to be there to grow with them for not only years, but decades to come. And if we acquire a customer while they're just stepping onto the conveyor belt of life, if we can continue to delight them, there's every reason to believe that they will continue to stay with us and grow with us as they go through predictable life cycle events. That can itself be a huge engine for growth. About 70% of our current customers are under the age of 35, and they'll typically buy an inexpensive policy with us, often for as little as $60 a year, that's $5 a month. So you start off sharing an apartment with a friend, and then you have your own apartment that you rent, and then you move in from a rented home into a condo that you bought, and then from a condo to the house and the family, just natural life cycle progressions. The insurance premiums grow in lockstep with these life cycle events.
That growth within our customer base takes on several forms. One is the natural graduation from being a renter to a condo owner. Here's a real-life example from a customer we'll call Jack. Jack bought a $60 annual policy with us, $5 a month. Then he wrote to us a year later. I've moved out of my rental and I'm buying an apartment. I'd like to cancel my renter's policy and get homeowner's coverage. Jack moved to his first condo and his policy jumped almost 12x in value. We got a 1,200% jump in premium with basically zero extra cost to acquire the extra revenue.
After we closed, I looked at Zach and said, we need insurance. We should have probably done this yesterday.
So I opened up the app, and I think all I did was I sent a message through the app, and I said, we became homeowners this morning, need to change our rental insurance to homeowner insurance, and it was super easy. We got the new policy, and it's been perfect since then.
So what % of Lemonade customers started as a renter and graduated to become condo policyholders? How many Jacks are there? If we answered that a couple of years ago, that number would be pretty small. But today that number is about 10% of our condo customers and growing steadily. And by the way, what we had to do to elicit this growth curve is just about nothing. 23-year-olds become 24-year-olds. 24-year-olds become 25-year-olds. And at some point during that time, they move from being a renter to a homeowner, following a natural progression. And we didn't have to do anything different or spend anything more. And it isn't only graduation that drives upsells. Our renters steadily increase their average spending on their renter's policy during the time they spend as renters. For example, customers who bought a renter's insurance policy 3 years ago spend 56% more on their renter's insurance now than when they first joined. Upsells in our category aren't just 10 or 20%, which is common in many sectors. They can be thousands of %. Think about yourselves and how much you pay your insurance company today. Ask yourself if you've been paying that growing amount to the same insurance company for the last 10 years, 15 years, maybe 20 years. And you realize why the dynamics of this space are so different from so many other businesses.
We sell $60 policies, $600 policies. We even sell some $6,000 policies. And the median age of our $60 policy holders is about 30 years. The next group is about 40 and the last is about 50. And so a core plank of our strategy is to acquire customers at a time when we have a massive advantage, delight them so that they never leave, and then as they go through naturally recurring, highly predictable lifecycle events, we grow with them. Our growth increases our efficiency, our profitability, and our ability to make ever larger investments, and so increases our differentiation and competitive advantage. That much would be true in any business. At Lemonade, though, growth also transforms what is arguably the most important factor of production in our industry: data. The core product we're selling is probability theory, a statistical algorithm that tries to foresee how many claims people are going to make. The more data you have, the richer your ability to foresee and to accurately price your insurance policies. We're able to collect and deploy data in ways that give us a real competitive advantage. When you sit in front of your broker, you're emitting loads of signals about what kind of risk you represent. Were you paying attention when she was explaining the coverages? Were you too busy on social media? Did you read the policy before signing it, or did you sign it sight unseen? Did you ask no questions, smart questions, dumb questions? All these may correlate with the kind of risk you represent, and all are lost in the ether of the traditional business model. Instead, the broker asks you 20 to 50 questions and generates 20 to 50 data points.
When you interact with our bot Maya, you're asked far fewer questions on average before giving you a quote. While you're only asked to answer 13 simple questions, our bot collects more than 1,600 data points. That's up to 100 times more data than traditional insurers.
Maya doesn't miss a beat. Every element of the interaction is captured, aggregated, and regression tested for correlates with claims.
Being fully digital lowers the cost of acquisition, increases retention rates, and earns us high ratings by customers. But it also generates datasets that are highly predictive, highly proprietary, and unavailable to traditional insurers.
When we launched, we had no data of our own. So we purchased basic industry information and started pricing and selling policies based on those data. It turns out that at 20 data points, much of humanity looks very much alike. And you price and underwrite large numbers of people as if they are a uniform, monolithic group. But what we found is that the data we were gathering, that 100x digital zoom we have, it showed us that groups that our competitors seem to consider to be monolithic were actually made up of predictable subgroups, with over 600% variation in their likelihood to file a claim. 600%. All this based on data that is available to us and unavailable to the industry at large. I think of it almost like the invention of the microscope. Before that, people thought that a drop of blood was a drop of blood, a uniform, indivisible thing. Under the microscope, people learned that there's all this microbial life going on. A drop of blood has white blood cells and red blood cells and platelets and plasma. Suddenly, when you've got a powerful enough microscope, you see entire dimensions that may be invisible to others. This is a historic shift for the industry.
Insurance is the business of using data to quantify risk. For hundreds of years, insurers had more data than any other industry. But in the last 20 years, they've lost this title to tech companies. That represents a strategic threat to incumbents. It suggests that insurers that will thrive most in the 21st century may be those that were built in the 21st century.
Having a ton of data is incredibly powerful, but it doesn't quite capture the full power of having a unified system built from scratch. You see, it isn't merely that Maya generates up to 100 times more data and that more data is better. That's true, of course, but the power of what we've built isn't just in the tonnage of data it generates. Our systems are entirely integrated, so data generated in a customer support interaction can inform the claims process, while claims data can routinely impact on marketing campaigns. The capacity of our bots to collect data is superhuman, but their true secret power may be in how they deploy data.
We only have one system. All of our interactions, all of our marketing, all of our underwriting, all of our claims, customer support and sales are managed by a single system. Every line of code was built in-house. And it's been amazing to see how this data feeds into the system and is fed by it in ways that have blown our minds.
All this amounts to a closed-loop system where every part of our business enriches and is enriched by every other. The whole is way greater than the sum of its parts. That's really powerful. Every customer interaction can make us smarter. And every customer interaction is an opportunity to leverage all that we've learned.
We put all our emphasis in getting smarter and faster every day. And a great example is how we automate a lot of the things that humans used to do. We do it through AI. We got a lot of customer tickets about moving. We realized this is something that a bot can do. And once we implemented that into production, we saw a huge drop in customer time to answer tickets. And we saw a huge increase in the way our AI was now answering customers.
In early 2018, only a small fraction of our customer inquiries were handled by an algorithm. That number increased to about a third of all inquiries in the second quarter of 2020. That's more than a 5x improvement.
I've been in the insurance industry for about 27 years. I was Chief Underwriting Officer at a Fortune 100 insurance company, and I spent 10 years co-leading McKinsey's global underwriting practice. In my opinion, Lemonade is a game changer in the insurance industry. I've never seen a company have as big an impact as Lemonade has had in such a short period of time. I can't think of an example where an insurer's top line grew at a 450% compound annual growth rate. But even in cases where insurers grew fast, by the standards of the insurance industry, underwriting results often paid the price and loss ratios deteriorated. At Lemonade, we've seen the exact opposite. We've seen extraordinary growth coinciding with a dramatic improvement in underwriting results. That defies conventional wisdom. I believe the reason is that traditional insurance companies are built on a human substrate, and humans can be overwhelmed by growth. They may cut corners, they may miss things. Lemonade's built on a digital substrate, and for AI, torrents of data aren't an impediment to learning and improving, they're a precondition for it.
John mentioned our loss ratio. That's a very important metric in insurance. I collect $1 in premium. How much did I pay out in claims? And this is the best indicator of how well we are pricing and underwriting risk. So we started off with industry standard data, those 20 data points, and to be honest, we didn't do such a great job. But as we generated our own data, and as our systems learned from those data, our loss ratio dropped. And it dropped precipitously and continuously.
Our gross loss ratio has declined by 296 percentage points from the first quarter of 2017.
There's a perception in the insurance industry that growth comes at the expense of quality. The beautiful thing about machine learning is that it can crush costs while improving results, while delighting consumers.
As Lemonade grows, we'll continue delighting our customers. That is our #1 priority, and we want to do that so that we can continue growing faster and understanding more about their data and feeding back to the machine and continuing to delight.
Can a radically different kind of insurance company be created in such a massive, entrenched, and oftentimes disliked industry? Can it be built on a digital substrate where machines and humans work in harmony? Can values, value, and technology create an insurance cocktail that consumers actually trust and love?
We believe the answer is yes. Whether you look at consumer reviews, social media sentiment, NPS, or market share, Lemonade seems to appeal to consumers in ways that no traditional insurance company has been able to.
You transform the business model and the user experience to delight consumers. So you attract them early and you grow with them as they go through predictable lifecycle events, all the while expanding geographically and into new product lines. All of these generate very rapid growth, and that growth translates into massive, unique, proprietary, and highly predictive data sets. These feed the machine, which gets ever better at understanding customers' needs, servicing them, automating, becoming faster and less costly to the delight of our customers. That is the Lemonade way.